Bitcoin bull is absolutely roaring to the upside right now. Here's Bitcoin on the daily chart. Look at these consecutive green candles. We really like to see it in a bear market as we try and figure out, navigate our way through here. I want to discuss in this video, is this the real deal? Is something special happening on the short-term daily chart that really translates to the macro in a good bullish way, or is this a fake out? Is this a bull trap? I want to discuss right now, and more importantly, as we zoom in on the daily, I want to talk about why it's probably more important and essential to be careful right now. But I also want to talk about in this video a data point that I just discovered as I was getting ready to do this video. This data point could be incredibly bullish for crypto and this macro shift of bear to bull, and it goes back to 2015 to 2018, and it kind of moves its way onto this 2023 bear market low chart. The consistency in this data is ridiculous. I want to lay that out for you. But first, let's talk about the move. This is Bitcoin right around $19,200 as I do this video. This is a critical move. We're zoomed in on the Bitcoin daily chart, but the reason it's critical is because we're hitting a level of resistance that we just discussed in yesterday's video. I want to show a quick clip real quick. An epic bull trap right now as we have all of this other macroeconomic data coming into play, because if those earnings start coming out as Bitcoin may be making a move to the upside, if it breaks the 20-week moving average resistance, we could start seeing that resistance really come into play and just bring Bitcoin back. So this is where this entire move could be a fake out. And this is why we're going to evaluate this now. Right now, as I do this video, Bitcoin entering that exact range of resistance that we talked about just in yesterday's video. So the range, if you didn't see the video, was the previous swing high to swing low. This is a daily chart, and you can just see this green channel. That's a Fibonacci retracement. This is basically these areas where Bitcoin will fall and then just retraces back up. And this is a key lower high resistance area. So the area Bitcoin just entering right now, basically right around 19,190 at the 618 and the 786 up here, the resistance ahead, $20,200 or so, another $1,000. The range of this channel right around 5%. Now Bitcoin is there right now. So when we discuss, is this the real deal or is this a rally? This is probably the biggest indicator that I'm watching to answer that question. We discussed it in yesterday's video. Maybe we get a rally, maybe we hit this as resistance, and maybe earnings or something starts coming out, and this is the chart that is so meaningful for what happens next to Bitcoin. It's the S&P 500. Notice trading right now, green candle, but just at this 200-day moving average. So this is going to play into the Bitcoin charts a lot. That's why I think it's very important, at least for me as I watch these charts, to be very vigilant of what happens at this range. We're a 5% range. Do the bulls have so much energy in them that they're actually going to explode through this range to the upside? That could be incredibly bullish. But what I want to actually mention is the fact that we've been tracking this move, right? This macro move. Now, this is a weekly chart. This is a Fibonacci 786 line. This escape of the bear market. This line historically is where Bitcoin bottoms out in the bear market. We've been tracking the escape, right? The break above the 786 and the 20-week moving average. This week, we still have 2 days, 9 hours before this weekly closes. So no matter what happens with this resistance right here, my question as we go into the last few days of this, or a couple days of this week, how does this weekly candle close? And the reason why that's so important, once again, if we look back at previous bear market cycles, this was the area where we saw Bitcoin explode above the 20-week, the 786, and escape the bear market. 2018, this is where we saw Bitcoin escape the bear market by breaking these two areas and getting good separation from those areas. And right now we're starting to get that move here. Now, the way that this translates over to the daily, I just want to just give you a zoomed in look at why right now this move is kind of a big deal at this resistance area. And then we're going to look at this crazy data point that I just discovered. But this 200-day moving average right here, we start zooming out on the daily chart. Look how the 200-day moving average is kind of interceding with everything that we're talking about right now. And Bitcoin right now approaching it, a very confluent resistance area with this shorter term Fibonacci resistance that we just talked about. Bitcoin has huge resistance at 19,500. What happens there if it hits it today? Is there an explosive move? Does the daily see just a big wick of resistance at that area? That's something I'm watching. The reason why that's meaningful, we start going back to previous bear market lows and Bitcoin escaping those areas. Check out 2019 when Bitcoin escaped the bear market. Just that 200-day moving average is a nice picture of bear to bull, right? So the bear market, you can just see Bitcoin just not having any success and just seeing resistance at these areas. And then finally, the end of the bear market, boom, explosive move above. So here we are on the current daily chart. Bitcoin, same type of deal, resistance or just crazy separation below the 200-day moving average. And right now, Bitcoin's actually approaching that area. This could be a macro shift indicator happening right before our eyes. That doesn't mean Bitcoin could not fall back below it, but the fact that this is the very first time in this bear market that Bitcoin might break above it, this is kind of this pivot point for the bears to the bulls. And again, this could be the beginning of a multi-month shift that we're anticipating for the end of this bear market, but this could be huge if Bitcoin is able to break above. Now, I want to talk about this data point that I discovered just right before I started this video. Check this out. It could be coincidence, but I love the consistencies in all of these indicators that I use on this YouTube channel. I think they offer so much value, and this is another consistent data point that would be absolutely ridiculous if it plays out. Check this out. We go back to the 2015 bear market. If we're looking at the bear market bottom formation, which we've been tracking all of these things, below the 786 bottoming out range, right? 301 days or so is how long it took for Bitcoin to fall below the range and then exit that range back above the 786, the explosive move out of the bear market. 301 days in 2015 bear market, okay? Now we go to 2018, 133 days it took for Bitcoin to exit. I always noticed that number kind of cut in half. And I always was kind of like, what if that continued, the consistency there? But then I started being like, well, what percentage is that exactly? And 133 days is actually around 44%. So 133 days, 44% of 301 days. So then I was kind of like, well, what's 44% or so of 133 days? Or a better question, this move. Now that Bitcoin actually is getting some separation from the 786 so early, what percent of 2018 is that, right? We go to the daily chart here, we're around 62 days it took Bitcoin to see this big move above, 62 days. So now we have 62 days compared to, 2018, 133 days, and we're looking at not 44%, but 46%. Some ridiculous consistency there. Now, I'm not sitting here saying, hey, that 44, 46%, 45% number is the magic number, and it kind of diminishes by that each bear market low, meaning the time gets shorter that Bitcoin trades below the 786. I'm not saying that's guaranteed, and we have just some bull, confirmation of we're exiting the bear market. We're never going to fall back below, but I'm just saying that is some crazy, crazy data. Now, in terms of if this actually played out to be just consistent, meaning Bitcoin actually does escape that 786 line, Bitcoin would have to trade. It only has around 10% to the downside of cushion, meaning Bitcoin would have to stay above the 786 line for this truly to play out. And what poses the biggest problem, I think, on the short term are all of these resistance areas that we're discussing. 200-day moving average, this shorter term, lower high Fibonacci retracement. It's nice to see this break to the upside, but I would say we should utilize some caution, at least I am, as we're getting this bullish move, because I think there's a good possibility it could be a bull trap. But again, we wait, we see, is there further bullish confirmation, meaning a huge break above this resistance area that could kind of step itself into a more mid to longer term bullish confirmation, a bullish signal that the true shift of bear to bull is happening. This is the move, an explosive move we would need to see on Bitcoin. Right now in the short term, I'm watching this range, a 5% range of resistance with that 200-day moving average right in between there, confluent area of resistance around $19,500 or so. That's the area I'm watching today, and it's going to be incredibly interesting, entertaining, exciting, and fun to watch. So let me know what you're watching out there, everybody. How are you doing? What are you thinking about this move? Comment below. Do you think it's a bull trap, or do you think it's the real deal? Do you think something huge is getting ready to happen right now. Let me know your thoughts about these Bitcoin and crypto charts. I appreciate you. Hit the subscribe and like. I'll see you in the next video. God bless.